Okay, so where was that right here? This pattern right here, where we're just grinding sideways over a period of days, okay, is what so what traders want to happen, okay, most traders want to happen is they want a reliable pattern they can read, and preferably they would simply like the market to go in one direction or the other direction. Clearly, what's happening instead is we're getting resistance on NQ to the downside. We've lost the leadership in NQ. ES is not rolling over, but it's not rolling down either. So what we're ending up with is a series of mirror image moves on both ends. And basically, what that means is we're getting failed range extensions on both sides. And if you'll notice, the last couple of days, just in casual observation, expand this out just a drop. Okay, if you look between this 9 and 10 a.m. window here, every single day we are getting a reversal somewhere between 9:30 a.m. and 10:30 a.m. If you go back to the prior couple of days, exact same picture. We get to this 9:30 a.m., which is approximately right here, and this 10:30 a.m. Okay, and given on this particular day, we didn't snap strongly to the upside, but you can see even on days where we didn't. This is a 15-minute chart. Even on days where we didn't snap strongly to the downside, responsive buyers came in and tried to push us back higher. Okay. Thank you, JD. I appreciate that. So, and actually, let me just put out a quick message. Obviously, there's an issue there, so I'll put it out to everyone. There you go. I put that out to everybody. Okay, so the point being here, if you look back over the last couple of days, this 9:30 to 10:30 area has become critical. And if nothing else, right, even when we proceeded to trend up through the entire day, this is the time frame where we either started trading sideways, right, and people were attempting to make pushes lower, or if we were down, pushes higher, right, and then the afternoon resolved itself. And that goes back to this pattern that you normally have almost every single day, where you have on a push down, you come back up about a third of the way, and then in the afternoon it makes a decision as to which way it wants to go. And the inverse is true on the upside, which is failed range extension. Come up, come back about a third of the way, and then in the afternoon it makes a decision of which way it wants to go. This has been the prevailing pattern over the last couple of weeks. The only question is on these is whether we get the turn at that 9:30, 10:30 slot, or on strong days like yesterday, both up and down. They delay it till late afternoon until we get the actual move. It comes later in the day, which really actually I don't like, because I tend not to be trading those hours. So that's the basic picture of what we've got going on. Obviously, ES is still stronger than NQ, and you can see that when it reverses. It was much stronger in the morning in terms of the drive up. And even early in the morning, if you look at the characteristic between ES and NQ yesterday, I'll pull this over one more time and then we'll go to the chart. If you look at the size and the strength of how hard NQ pulled versus how hard ES pushed, you can just see right out of the gate there was no hesitation. If you reduce this down to a 5-minute chart off the open, which is right here at 8:30 a.m., we actually spent some time trying to push lower initially in NQ, and it came down to test its Globex lows. By comparison, ES didn't get anywhere close to its Globex lows yesterday. So again, that shows that, at least to me, that each and every day ES has been stronger for I think 3 weeks now, and even on rotations lower initially, the pushback to the upside have been stronger on ES than they have on NQ. You can see we just kind of completely drove down with not very much recovery at the end of the day, and you can see on these wicks where they were trying to step in on ES and pull them back up. So that's my general observation, is that I'm quicker to short NQ than I am ES. Let's get into the individual charts so we can get rid of this. Don't need it anymore. Another chart, and I need to make a quick adjustment here for where we at on Globex highs and lows, make sure I have them right. So 1866.50, got that right. That lined up nicely. That was easy enough. And let's see, it looks like we may actually go the other way, 1872 3/4. And let me check to make sure we have what econ we have really quick. And we have JOLTS job openings at 10 a.m. I don't even know what the hell that is. I really don't care, but that's what's coming up along with wholesale inventories at the top of the first half hour. I don't recall either of those having a major impact on the market before, but you never know. And just so you know, on my trading, I really don't care what the news is. I more care about what the price action is relative to the news. I don't spend very much time trying to interpret. I don't spend very much time trying to interpret the data. Thanks, Micah. So apparently Yellen likes the particular jobs indicator that's coming up at the top of the hour. So importantly, we're getting balance on both sides, right? So that you know when we're grinding, one of the entries that have been working extremely well over the last 2 weeks has been the 1 minute tick divergence at an important area, not just randomly, but if it's actually in a zone with 1 minute tick divergence. It has been paying very nicely in counter trades. I've had multiple clients doing very well using that to dial down their trade location. So let's go through and look. Looks like we're banging up right against, so whatever just came out, something motivated people to try to pull a reversal off of this. So the first thing is, when we have a market like this that's switching both ways, trying to stick a trade becomes very dangerous, right? For example, it sure looked like we were going to grind up all day long yesterday, and people just get killed when we get these downside moves, because what most traders try to do is they go, okay, I've sold every other move, I've been waiting for the market to break out, I've gotten in good position, I'm just going to hold through here. And they're going, there's no way it's going to come all the way back, I'm up 10 or 12 points on this trade. It comes all the way back up, all the way back down, and then you go from being confident in your trade to desperate in your trade. If you'll simply pre-plan where you're going to exit, it makes a huge difference in the amount of confidence you're going to have. And also, once you have a good amount of cushion in a trade, bring your stops up to break even so that you don't get sunk like this. The market's whipping really hard, and it's showing no indication that it wants to take one direction or another. So don't force your hand and try to force it. Instead, scale as the market is moving up. It'll make your life a whole lot easier. In terms of taking trades today, where I'm looking, it looks like we're opening, or we're going to try to push the open to 1872 3/4. This is kind of in the middle of nowhere. I really would rather not have structure here. So remember, all of this, all the way down, was relatively poorly auctioned, particularly from here down to here. Now we re-auctioned. Let me change this. We re-auctioned all of this. Okay, so this is actually okay, and this, if you'll notice, this 1872 3/4 is simply a backside touch of the very top of this structure right here. Okay, so the next structure behind it, getting more detailed, okay, will be right here at this about 1874 1/4. Okay, so technically, my hope would be that we push up to this 1874 1/4, and then we'll have a zone 1872 3/4. 1874 or 1874 1/4 to 1872 1/4 would essentially end up being the zone, along with gap fill, right? That would make our lives easier. I don't know if they're going to give it to us. So the first thing that we're going to want to see off the open is the ability to get above and hold above Globex high, right? After that, this is a white zone today, and by the way, let me publish this. I'm sorry, I was so working so hard on trying to get the sound correct and get these features correct that I'm a step behind on the chart. So let me get this out here really quick. Let's bring this down to here. To like this first. And then I will make adjustments for Globex high and low. Let me get the upper levels out, and then I'll get the lower levels out, since they apparently can both be in play today. Okay. So this everyone should have been able to get that. Hopefully that went to everybody. Then let me get the lower levels here really fast. Okay, and then let me get the file out real quick to everyone, and we will move on. I apologize for the delay. Okay, I think everyone should have that now, and hopefully that's working well. Moving forward. So just so you know, what I'm trying to achieve here is I'm taking a specific trade at a specific point. I'm not a trade caller, right, or a trading service. What I'm trying to do is teach people how to trade and how to make good trading decisions for themselves. So what I came up with yesterday is 1876 3/4 to 1878 3/4 is actually critical. And I want to label it my white zone. I will take a trade first time into this 1876 3/4 to 1878 3/4. I'm not exactly sure what would bar me from taking a trade right here. So it looks like this 1872 3/4, for now at least, are holding it as Globex high. So what's my biggest concern? Are open drives higher? Okay, so what are open drives higher categorized by? Well, this is going to be pretty easy to demonstrate, so why don't I just, instead of drawing it, I'll pull you up a picture of it, print it. It had all the characteristics yesterday morning of an open drive higher. Here we go. Okay. First 5-minute low is maintained as the low it's not penetrated. The first 3 candles, right, are all green. Right? And there's almost zero rotation. If you break this down to a 1-minute chart, okay, here, why don't we do it? I'll make it easy on everybody. Because it is so important. So many people lose money in open drives higher because they fail to recognize them, that I want to spend, and until I could figure them out, I lost money with them too. Okay, so here's the first 5 minutes. They try to get a little bit of selling, right? By the 5th minute, obviously the buying started. Also remember, Janet Yellen was speaking yesterday, okay, and she released her notes right at 8:30, okay? So we had a minute or two of indecision. Responsive buyers came in. Now look at this from here all the way up till 9:05. The biggest rotation that I can find in this entire thing on a 1 minute chart is from 1881 down to 1878, and you just had to nail it just perfectly. There was actually a zone right here. And even with that, look, there was just no counter rotation, right? When you see this and everything is green in front of you, and on the red bars, there's really no rotation, there's no measurable rotation lower, right? Wait till this at least starts doing this for a period of time before you decide to step in front of it, right? Okay, so let's talk about that for a second. What's the fear associated with this? Many days we're very accustomed to getting an open and then a push into Globex highs and then a quick rejection, right? And that forces you to act quickly if you want to capture that, right? And that is true. But most days when we get that push into Globex highs, first of all, there isn't news right at the open. So that was the first clue. Because we did not gap up, we clearly gapped down in this particular case, right? So that was the first clue. Normally, this pattern that you're looking at is accompanied by a gap up and then a drive. So that was a bit tricky in terms of if you normally are cautious for that. But everyone should have known, I know I made very clear on the open that Janet Yellen would have a dramatic effect on the market, right? And then if you look in terms of trying to take the counter trade, this was the first location we went from 1882 to 1878, where we finally had a decent sized rotation lower. And this is just looking at a 1 minute. Again, I don't trust trade off of a 1 minute. But if you look, that's where we actually started getting the two-way play in the market up and down. And it still took all the way over till New York lunch, right? Till we actually started seeing some relative weakness in the 1 minute chart where the rotations down were not being met by rotations up. Okay? And there was still plenty of time at that point to capture the downside move, right? You didn't have to be the first person in. So while the market's going through the course of the day, look at the rotations. If the rotation's up 10 and down 3, right, you can chill. There's almost never a situation where the market does this, straight up and straight down, and that's it. I'll leave that note. I struggled with that many years ago, getting run over by open drives higher. I worked very hard to avoid it. I think I've covered it enough here, so we'll get rid of this now. What I just did. Didn't want to do that. Let's get rid of that. Okay, so assuming no open drive higher, I will take a trade into this 1876 and 3/4, 1878 and 3/4 first time in. Okay, and then at this 1882 Thursday's high, I will take a shot to the short side. Okay, now realize all of this from really 1882.50 and above is still relatively poorly auctioned all the way up to 1892.50, and ES has been strong. It's not breaking down. It's just trading sideways. Okay, so it is possible to get run over at the zone, but barring news, okay, most of the zones have been getting a responsive sell, both from the front and the back of the zones, first time in. So what that is indicating to me is that I'm more inclined to take a trade off the front of the zone and use a 4-point stop. Remember, what I'm trying to achieve is a 70 to 80% win rate over the series of 10 to 20 trades, right? So any one trade stopping me out doesn't concern me. How do I measure in terms of risk when I'm working with my clients as to where I'm going to take the trade? The appropriate stop for this trade is always 2 points behind. And I've spoken to several clients over time who always struggle with this 2-point stop, right? Because 4 points seems enormous. And what they'd rather do is use a tight stop and enter and exit. Well, my experience has been, but if you keep a tight stop on here, so algos can usually hunt within a point to a point and a half. Like if you, there's software that you can purchase that'll alert you when algos go off. I used to have it. I don't need it anymore. But what I learned during that time of using them is that for the most part, algos could fire for a point to a point and a half. If you keep your stop 2 points away and you're just slightly off on measuring, on getting the correct rotation size up, all that's going to happen is they're going to come up, tag you out for those 6 ticks, right, and then snap it right down. And what that forces you to do, usually for most clients, is you don't end up in a situation where, oh, I just got tagged out, I'm just going to move my next entry another point higher. what most traders do is they end up coming in, getting tagged out, and re-entering here, and then getting tagged out a second time till it finally breaks, and it can really, really suck. It's very stressful, and it's a hard way to make money. If you'll just go over the zones for the last 30 or 40 days, and I usually give a heads up when they're not working. It's rare when they're not working, right? And particularly in the first 2 hours. First move into the zone with a 2-point stop behind, just like yesterday, has yielded a 2-point plus gain consistently in the first 2 hours across those zones. Now, obviously it's not guaranteed, and any zone can stop, and there have been stops over time over the last 30 to 50 days. However, the vast majority of the zones have worked, and the vast majority of the zones have worked from the front. And the reason why is because we switched leadership from NQ, which was relatively illiquid and getting a ton of money pumped in, so it's just driving the markets really hard, to ES and more of the blue chip stocks. And that is, oh, thank you, JD, on that. So the reason for that is when NQ has leadership and a ton of money is trying to pour into those tech stocks and small cap stocks, they're illiquid, and they force everyone's hand to come in right away, and so you get no rotation. The blue chips, however, have a ton of float in them, right? They can absorb a lot of buying and a lot of selling. So what you end up with are these nice gentle rotations up and down, even as it works its way to a particular point. Let's say we're going to go from here to here. NQ, when it's the leader, it just drives straight. ES will kind of follow this kind of like this meandering path on the way down, and then finally when we get to the panic, it kind of does one of these straight lines down and shakes everyone out, and then we get this rebalance. Okay, so it's just a difference in leadership, and that's all it is. Okay, so on the upside, to be clear, I'm taking a short here, taking a short here. Above this point, excuse me, here, here, and here. My only caveat: open drive higher. I'll call it as soon as I see it. Usually within the first 15 minutes, I can figure that out. And secondly, watch for the open drive higher to possibly start upon the release of the data, right? And if you'll go back, I've highlighted that a couple of times on stock puts. I'll show it again if it happens today. But generally, what that looks like is 5 minutes before, you'll see the market starting to drive one way or the other. And so generally, I'll use the 5-minute bar prior to the release as kind of my swing high or swing low for whichever way we go, and it'll look just like it did yesterday, only starting at 9 o'clock. You can usually tell if we're starting an open drive at 9 a.m. by all of a sudden whatever rotations were there prior to the news completely disappear, and we're back to that less than 2-point rotation, 2.5 if it's perfect. Okay, and then also watch the NYSE tick will be predominantly positive and stay above 0 through the entire drive higher. And just like yesterday, and I'll go back and show this if I have time in a moment, just like yesterday, when it finally broke, you saw the tick starting to get negative 500, negative 600, negative 800, which is indicative of the trend has been broken, and also you saw the sideways consolidation into the afternoon. Along, by the way, for my coaching clients, the trap trades in ES set up 3 times yesterday, and it was quite clear, and they were quite easy to set up. Pay attention, especially when we have big range days, right, to the first hour high and the first hour low. If we break well below that first hour low and then we recoup it, there's a good chance on either direction that they're going to push back to the middle, okay, on that failure. That panics a lot of people. They want to see it hold above that first hour high on a trend day up or a trend day down, and it forces people who were late on either end of those ranges to either buy or sell to cover, and it tends to push back just like we did yesterday. So, and I'll show that if I have a moment here. On the downside, okay. Right now, obviously Globex low is 1866.50. That also puts us right into Thursday's low. First time into that area, I will take along that as soon as that we open at this 1870 and we tag this 1872 first to the downside. If we get responsive sellers in here prior to the open and we open at 1867, okay, it's not going to be enough of a rotation here. It's only going to be at best a 2-point rotation, and at that point what this becomes is an extremely aggressive trade, and it can simply get swept like it did, where Wednesday morning I believe. We simply swept through the prior day's lows. Again, there was some heads up there that it was about to break. Oh, Janet Yellen was speaking. That's what it was. So I don't think we have anything like that on the docket today. And because of that, I would expect the first time into Globex low / Thursday's low, I would expect some type of responsive pushback. If I don't get this because of the lack of rotation down into this area quickly, okay, I'm usually gone. I won't even usually hang out for 10 minutes. It pretty much has to give it to me immediately, almost, like within 5 minutes. I'm not very patient when there's not a lot of rotation into an area. And it's a very aggressive trade. I will not call this trade in real time. I will take it, and also know that my stop will be 2 points behind. And occasionally I get tagged. Most of the time I make money in here. And these have been sticking pretty well, again, barring Janet Yellen speaking. First time is 1860 3/4 to 1858 3/4. I will take first time in. Again, with this 1855.50 to 1853.50. Actually, every one of these zones below is, okay, so there's a couple things. Time-wise, if we look at this chart to the right, I have the same concern I have each and every time. Let me do this really quick. Poorly auctioned areas. Okay, so we are poorly auctioned, specifically from here down to here. We are very poorly auctioned. So that's what, essentially 1872 all the way up to, what is this? 1879-ish, right? What does that mean? Okay, this was better auctioned than we were here, okay? But it still wasn't auctioned fantastically, okay? It was done in tiers, and I'll show the profile here in just a moment. That might help you all understand that a little bit better. But basically what that means is it would be relatively easy to slip up right up into this 1879, 1880 area, and then I would expect also that this would be a retest of breakdown retest, right? Market does this consistently with the concept of breakdown retest. At any rate, this area right here was extremely poorly auctioned. This one's better auctioned, but not fantastically. Below, if we look to the left, if we get below this, really it's this 1860, but specifically, and then 1856, as you look to the left, which is always where the answers are, right? You can see we responded out of those areas, but if you look underneath, so we approach this, okay, that this was all, let me grab this, all of this, all the way down to this 1844, is extremely poorly auctioned below 1856. So you want to keep in mind, right? See how easily we slipped through? It was very poorly auctioned the first time, and it was so-so auctioned the second time back up. Better than this, but not much better. And then if you continue to look to the left, hell, let's do this on a 15-minute. It'll be ever easier for everyone to see. Because I'm taking too long. Okay, so there we can see a little bit better. You can see this area, extremely poorly auctioned, right? What's behind this really doesn't matter. It's that we didn't take these stutter steps through here like we have here. We can slip through very easily up into this area, okay? On the downside, you can see below here, and specifically below this point right here, okay, very poorly auctioned, okay? And then right below this little lip right in here, which gives us below 1860, again, very poorly auctioned all the way back. And then if we look to the left far enough, all of this is extremely poorly auctioned. What happens when we get to markets that look like this on a 15-minute chart? Well, it's the inverse of this. See how this was poorly auctioned? And it can slip right back up. This is where traders get creamed standing in front of it. Now, what is the pain in the butt about something like this? Is that the market doesn't have to re-auction an entirely poorly auctioned area at one shot. It can simply say which is where your range extensions and tick divergence come in. We can simply decide, let's play pretend land for a moment. We can simply decide this whole thing is poorly auctioned, and the market may just simply want to auction half of this and get hung up like this, and then flush down through here and then recover back up this way. There's no rule that says it has to slip right through. the market has a choice. It can take its time in re-auctioning it, okay? But the net effect tends to be the same, and that's this type of price action. Here, let me show you. Okay, right here. See how this is all poorly auctioned? And the market took its time re-auctioning this area. Then it slipped through quickly. We got through here to the bottom of this. Okay, it took its time and re-auctioned this again. We came back through. See how on this particular day, everything through here was poorly auctioned? We came back up, we tested, we rejected, and what goes through easily on the way up goes through easily on the way down. We slipped through, and we came back and we completed the auction down to, see if I can pull this all in, down to this point right here. But we still have all of this underneath here that is still very poorly auctioned. And if you look to the left, all of this is still poorly auctioned. This little piece is poorly auctioned, and then underneath here, it gets worse and worse as you go down. And what occurs there is it means it's very possible, if the selling pressure is high, that instead of getting this type of price action, you get this kind of price action which just keeps slipping. And these are 15-minute bars, so keep that in mind. So, referring back to today in today's charts, now that we're clear, the first thing that I would have on my chart for today that you need to add is this trend line right here. Try to break it, and I would adjust it. I would do it from 2 points like this and like this. All right. Obviously, just like yesterday's uptrend line in the morning, which gave another clue. I'm going to try to do this as quickly as possible and then jump off. Okay. Just like yesterday when you were looking at the short side, right? That was essentially our uptrend. You can see when we came into it yesterday afternoon right here, they tried to hold it. It failed, it broke, and then we really got slippery, right? And the reason why is the area they were trying to hold it in, if you look, they really needed to hold it right here. This was that last line of defense, and it failed. You can see they tried to get back above. This was really what needed to hold this bar right here. And that failure of that bar is what really killed this whole deal. We slipped below. This is a last-ditch effort to hold this trend line. Again, I don't trade trend lines. I just use them to kind of give me where we are on the map. You can see once we broke, there was nothing underneath to help us out to all the way down back in this area. So today, let's get rid of this. I feel rushed. I apologize, guys. I just normally have more time to spend on the charts. So on the downside, being cognizant of that, all these zones down here have to give me my P&L within 15 to 16 minutes. I'm not even going to let the 25 minutes go, and the reason why is it's slippery all the way down, and I don't want to get run on my stops. Furthermore, the entries that have been easier to stick on the downside in this market have been those with tick divergence. You don't have to have a 1 minute tick divergence to get a big response out of a zone, but if you need that second piece of reassurance, pull up a 1 minute tick chart and look for that tick divergence. But the tick divergence, I want to be specific, has to be in the zone. The tick divergence 2 points above the zone doesn't help you. Also, specifically on this chart, when you get down here, if somehow we do, okay, 1840 to 1838, I'm willing to lose 5 points on this zone. Okay, so depending on where I take it, my stop will be somewhere between 3 and 5 most likely. Okay, which the problem with that is it pushes us right back into this area. This is support, but it's pretty weak. Open gaps, which is what this is, okay, tend to trump anything else. You tend to get responsive buyers out of there. 9 times out of 10, I've regretted every open gap I have not taken. 9 times out of 10, I've lived to regret it. Okay. So also look how far we'll be stretched. This is essentially puts us 30 down on the day. Assuming as long as I will take this trade as long as this does not hit in the last hour. I don't take contra in the last hour. It's just simply too hard, and people get too smoked too often. Okay. But other than that, each and every zone I plan to take really doesn't concern me. Where we're at, the time factor concerns me. I expect response at each zone. And again, if you'll look at your P&L, I bet dollars to donuts, every one of you, if we took a poll of everyone out there, and you looked all the way through the course of the day, that the gross majority of y'all were profitable prior to 11 a.m., between 8:30 a.m. and 11 a.m., okay? If you stopped every day, regardless of whether you were profitable or losing money, right, and you could erase everything that you lost in the afternoon session, right, and take out everything that you might have made in the afternoon session, and then looked at what your P&L was over the course of time that you've been trading, I would be willing to bet a lot of money that all of y'all would be more profitable than trying to push your trades all the way through the course of the day. I don't know what it is about traders, myself included, that like to try to push ourselves all the way through to the end of the day to make money. It's hard and it's stressful. So I've started paying a particular amount of attention to how much stress I'm experiencing through the course of the day. And what I'm finding is I'm actually feeling a lot better when I spend time coaching others and teaching than I am trying to capture that last dollar or bump up on my dollar. And I'm actually pretty good at scalping in the afternoon. Most of my afternoons are actually profitable. And I'm still finding myself feeling much more relaxed and generally feeling better, focused on learning and getting my trading game better in the AM. And there's reasons for that. After 10:30 a.m., right, you lose London. London has estimated 40% of the world's hedge funds and pension funds located there. So, okay, maybe they stick around till 11:30, right? But how long do you stick around after market here in the U.S. if you're trading, right? By 3:30, 4 o'clock, everyone's gone, Central Time, 5 o'clock New York time. So those guys in London, with the exception of the couple guys that I know, for the most part, those guys want to turn it off. They've been pounding it all day over there in Europe. And we lose a large amount of participation. And that's why it gets sloppier quite often in the afternoon. And it's harder to get very specific on where we're going to have responsive buys. And then when it does snap, the snaps are more violent, both down and up, because there's fewer participants and there's no one to absorb the other side of the trade. Okay, so quickly, it's 8:26. The important parts for today. First of all, the low, I'm not going to create a zone here at this 1872 3/4. Okay, normally the zone would look like this. It's just not landing in an area that I'm comfortable with. Normally the zone would look. Okay, and there is a zone here. If you look, the zone would be 1872 3/4 to 1870.75. If you want to put it there, you're welcome to. And it may play later in the day that actually ends up providing resistance, but where I want to target is somewhere between this gap fill. If I'm going to take a trade on the upside, and reminder, there's not going to be a lot of rotation into that, okay, so it's an aggressive trade. If I'm going to take that trade, but I want to target it right at the very back, and my stop is going to be 2 points above, okay, and that's an aggressive trade. I have no way of determining whether it'll work or not, other than I know over time that's a good trade for me. Watch NQ. NQ is still negative by 6.5. We want to see if you can get positive and stay positive. Watch for it breaking Globex lows, very importantly, right? And then if we don't pause at Globex highs, right, the next thing I'm looking for is, instead of trying to force my hand through here, is that if we get above Globex highs and then close back below on a 5-minute bar, I'll look for it to trap and go to the other end of the range. Overnight, it wasn't a huge range, so I really don't have a handle, I guess, on what I'm saying here is what I'm trying to say here is I don't have a handle on short or long, and neither does anyone else, and that's why everyone's getting whipped. And that's why I'm saying default back to your 1-minute tick divergence after 9 a.m. It's not very effective prior to 9 a.m. Okay. Secondly, give yourself a good size rotation, right? If you're trading less than a 4-point rotation, don't be surprised if you get run on. Taking Globex high, Globex low is a perfect example if we don't have a decent rotation there. And then key off of NQ. NQ has not been leading, but you'll notice NQ participated on the upside, and that's what gave ES a strong run. You want to see NQ not getting weaker. It can just stay neutral. It's fine, right? And the last note is range on NQ. Still 60 points on a big day, but I think most days the ranges are going to be 15 to 30, and with the average rotation is going to land somewhere between 10 and 15 points before getting a contra snap one way or the other. My day traders know what I'm talking about there. And on ES, I think we're going to be dealing with a 15-point intraday rotation with extended ranges to 30 on big days. So I'm looking for rotations between 10 and 15 to have bigger counter rotations at that point. So I hope that made sense. If you have any questions, you can email me at tradingforform.com. Hopefully the audio and the video were better on this. If they're not, let me know. I'll switch services. I'm certainly paying too much money for them not to be good. And I'm going to drop off now, guys. Have a great day.